Global Economy Outlook 2026. The global economy in 2026, centering a transition phase. Growth is slowing in developed markets. While emerging markets are stabilizing not in the United States, economic growth is expected to remain moderate. Consumer spending is cooling, but it is not collapsing. Inflation is lower than previous years, but still above long-term targets. Central banks are more cautious now. Interest rates may not rise aggressively, but they are also not dropping quickly. This creates a high-rate environment for longer. High interest rates affect everything. Housing markets slow down. Business borrowing becomes expensive. Consumers reduce large purchases at the same time. Government debt levels are at historic highs. This limits how much stimulus governments can provide in the future. For investors, this means one thing. The easy money era is over. Returns will come from discipline, not speculation. Markets will reward fundamentals instead of hype. In 2026, volatility will remain normal. Sharp rallies and sudden drops will continue. This is not a crash environment. It is a selective growth environment. Sectors tied to real demand, cash flow, and essential services will perform better. Highly leveraged and speculative sectors will struggle. The key takeaway from the global economy is simple. Growth exists, but it is uneven. Smart investors must be selective, patient, and data-driven. Stock market expectations 2026. The stock market in 2026 will not behave like the post-pandemic rally. Returns will be slower and more selective. Large index growth will depend heavily on earnings, not speculation. Companies with strong balance sheets will outperform. Technology remains important, but expectations are more realistic now. Investors are focusing on profitability instead of promises. Dividend-paying stocks are gaining attention. In high-interest rate environments, steady income matters. Valuations are under pressure. High price-to-earnings ratios without earnings growth will correct. Market corrections are not crashes. They are adjustments. Long-term investors should not fear market pullbacks. They should prepare for them. Dollar cost averaging remains one of the most effective strategies. Trying to time the market leads to mistakes. The key in 2026 is asset allocation. Not all stocks will move together. Defensive sectors like healthcare, utilities, and consumer staples offer stability. Cyclical sectors depend on economic data. Short-term traders face higher risk. Long-term investors gain advantage. The stock market rewards patience more than prediction. Gold and silver market outlook. Precious metals remain important in uncertain economies. Gold and silver serve different purposes. Gold is a store of value. Silver is both a metal and an industrial commodity. In 2026, gold demand is supported by central banks. Many countries continue to reduce reliance on the dollar. Real interest rates influence gold prices. If inflation stays higher than rates, gold benefits. Silver is more volatile. Industrial demand from solar, electric vehicles, and technology supports long-term growth. Supply constraints remain a factor. Mining output growth is limited. Silver reacts faster than gold in market cycles. It rises faster and falls faster. Investors should understand this difference. Precious metals are not for quick profits. They are for diversification and protection. Allocation matters more than timing. Real estate and housing market. Real estate markets in 2026 remain under pressure from high interest rates. Mortgage affordability is reduced. Prices are stabilizing rather than crashing. Supply remains limited in many regions. Rental markets stay strong due to housing shortages. Cash flow matters more than appreciation. Investors focus on yield, not speculation. Commercial real estate faces more risk than residential. Office spaces continue to adjust to remote work trends. Real estate investing in 2026 requires careful analysis. Location and financing terms are critical. Smart money strategy. For 2026, the smart money strategy in 2026 is balance. Diversification reduces risk. Cash provides flexibility. Investments provide growth. Avoid emotional decisions. Focus on long-term goals. Risk management is more important than return chasing. Financial success in 2026 is built on consistency, patience, and data. Please subscribe for more updates. Have a nice day. Thank you.